Hey there, this is Trader Tim from eMoneyMind.com. I'm here to help you improve your trading and become financially free so you can live the lifestyle you want. And today I'm bringing you a trade recap video for it's actually Wednesday instead of Thursday when I usually do them. Wednesday, the 8th of May, and inside day. And what that means here on the E-mini S&P is that the high and the low of today were encompassed where they were within yesterday's high and low. So anytime we have a big body candle or a big range day, like yesterday was a 50-point range in the ES, I'm always, watching for an inside day. So until we break above or below that prior day's range, we're going to be inside. And what's that mean? Well, a lot of the times inside days are very much range bound, and there's some usually deep pullbacks that end up either being fake outs or we just constantly go from the top of the range down to the bottom of the range and just sort of back and forth all day. Maybe we kind of rise in a channel, or maybe we're just going very horizontal. But I wanted to walk through today and the thought process. We didn't really have much news coming out this morning. First 15 minutes, I just let that kind of settle out. And the first thing I drew up was a retracement long. And we pulled back. I didn't put a limit order right here. I wanted to see if we'd pull back and stop at that 50%. A lot of the times, inside days or range bound days, there's not really much support or resistance at the halfway point. In this case, we were about 10 minutes in. We did stop there, so I was looking for a long setup, but we didn't get that. We kind of took off and traded right to the negative 23% target. At that point, we actually got a high tick up at highs. And just run through the nicey tick. So we had a high tick at highs, and that signals that could potentially be a high of the high of the day, or a short-term pullback. So the next thing I did, I drew the next retracement to make sure that if we pulled back, so here's the swing low, and if we just pulled back and stopped at the long, then I wouldn't like taking a short. So because this very first retracement pulled back to the 50, traded to the negative 23, the very next thing you do is draw the next retracement. So I'm also thinking, okay, here we had a high tick here. If we can come out and break this swing low, then taking a short would be a good play. But the only other thing stopping me from doing that is the full halfway back for the day. So if we were to come down, let's say we're moving up in a series of retracements. In this case, there were only two. But whenever we break that series, when we break the 61.8, then I draw the full halfway back. And we actually came really close to stopping at it. And I felt like that was close enough. The actual entry would have been an 80.50, and we came to an 80.75. And so I looked at that long setup as basically traded here. So I decided to pass on the short. Then we kind of got sort of channel. It was almost like a bull flag, if you will, where we went up here and then flagged to the right in sort of a downward channel. And seeing that we had the support at the halfway back of the day, I did like the opportunity for a long if we could break highs, because at the time this was the high tick of the day, and that can signal that that might be the high of the day. We weren't able to break out over here, kind of traded up towards the top of the first 30-minute range. And so as soon as we broke above it, we ended up getting another high tick at highs right here at 720. And so, okay, start the opportunity looking for a short setup again. Now the halfway back of the day did not hit its negative 23% target, so I just left that drawing up, and I was looking for a short as long as we didn't come down and touch the long first. So you can see this one, here's the swing low I'm looking for to break. I drew from highs to lows. This pullback was much farther away from the halfway back, so I put my order 2885s and then rode that down a couple of legs here down to right here at 8075 is where I ended up getting out of the rest of it. So the idea of taking whichever setup trades first can really help keep you out of some, I wouldn't call them bad trades, but it can help you filter your trades a little bit better. So after that short, we had broke the halfway back of the day. And so I was expecting us to go all the way to the bottom of the first 30-minute range. That's what usually happens if we trade at the top of the first 30-minute range. Maybe we peak above it like this and start to sell off. Usually we go all the way to the bottom. But today we didn't, and so that kind of set my red flag up with, I don't want to be trading in the middle of this range in between the high and low of the first 30 minutes. So I drew up the short, but not placing a limit order. Saw that fail. I drew up the long, and again, I didn't place a limit order here because we were in the middle of the range. But that one did end up it came close. It kind of chopped around for a while. It traded in, and then it came up and broke through highs, and it really didn't give much of a pullback until we were on the other side of the first 30-minute range. And then let's see, 801 here, we had another high ticket highs, but you can see how you draw the next retracement and see how before we trade into a short, so if I draw up the long and the short, the long touches at 802. The short doesn't come up here and touch until 804. Therefore, the long traded first. I have to pass on the short. And then we were kind of at the 90-minute mark. I was looking for, maybe a bounce off of the top of the first 30-minute range. The next retracement got a little bit of a bounce here, but then really just chopped around and then rolled over. So just the one short for me today, and I was more than fine with that given that, inside day. So you can just trade off of the 512 tick chart, but I do find it helpful to kind of keep your eye on, at least at the start of the day, where the high and the low are from the prior day. And in this case, where is the daily halfway back? Like, where are we in that trend? In this case, we're right at the start of a new halfway back long. And so if you do just have the one 512 tick chart that you're trading, and just make sure to kind of jot down some notes and either keep them on a post-it note or a legal pad, so that as you're day trading, you don't get too into the weeds and forget some of the bigger levels that might be out there. So these days are particularly difficult following a big range-bound day. So don't feel bad if you didn't have any trades or felt like it was a pretty tough trading environment. And we may have this for a couple more days because this Tuesday candle is so big. But if we come up and trade at 29.09 and a quarter, might have an opportunity to take a short and ride that back down to retest this 28.72.75s. And if we go higher, and don't see any resistance at this 29.09 1/4, then we could draw the next long like that to wherever the highs end up stopping. What I don't like to see is if we were to double top, rally, and then trade right about the same high as the prior high, that weakens the possibility that the next long setup is going to hold. It still might, but you're going to have more selling opposition pressing on those buyers. So just some of the ways that I look at the markets, and I hope that was helpful. If you have specific questions, you can always shoot me an email or just leave me a comment below, and I'd be happy to answer. Thanks, everyone.